Hello everybody and welcome to today's webinar, all about getting to know pensions. My name's Calvin and I will be your host and presenter for today's session, and I'm joined alongside me by Claire and Duncan, who'll be in the background there answering any questions that you might have throughout the session today. So firstly, we're going to have a look at setting up and assigning a pension scheme. So we're going to look at how to set up a pension scheme and then how to manually assign that scheme to your employees. Now we are going to be focusing more on the manual processes. So for those of you with the pension module, there are a couple of references to that, but we do have a separate webinar for the pension module coming up in the next couple of weeks as well. So if you are a pension module user, please do check that one out. We're then going to have a look at the opt-in and opt-out requests as well. So again, we'll have a look at how to manually process opt-out and opt-in requests. And we're going to then dive into some calculations. So how is a pension calculated and how the scheme settings can affect that calculation. And this is a great tool to have and a great bit of knowledge to have when it comes to troubleshooting any pension calculation or pension contributions queries as well. And at the end of that, we do have a question for you guys to answer as well. So we'll be going through some calculation examples, and then we've got a calculation for you all to complete at the end of the session to get involved in, to make it a bit more interactive. And then we'll finish off with some further support and of course any remaining time we have left over for any questions that we might have. Okay, so let's get started with the first section, which is all about setting up and assigning a pension scheme. So we've got a couple of screenshots here. So this is the pension scheme settings, and this is where you will set up your pension scheme. And this is where you'll be checking those settings and how a pension is calculated. So these particular settings determine how a pension is calculated. So do keep in mind for this one a little bit later on. So on the left-hand side there, you'll see we have a number of pension schemes. So we've got our Nest pension already set up, as well as pension scheme 2, 3, 4, all the way down to 10. These are just default schemes. They're built in, they've got no settings set up at all. You just edit one to create your scheme. You can add new schemes if you do need to. Now, when it comes to assigning your pension scheme, so we are going to jump into a demo and show you those settings a little bit later on, but we'll go through the slides first. So when it comes to assigning the scheme, first you're going to need to assess your employees, and this will determine if they are eligible, non-eligible, or entitled. And any eligible employees must then be enrolled, which means you will have to assign a pension scheme to that employee. Skipped ahead a bit before we do. The screenshot on the right there has the legislation settings as well. So when it comes to assessing your employees, you'll be looking at their age and their wage as well. So I'll show you where to go in the program to find this, because it's a really useful resource to have. Just shows you all the thresholds, the earliest assessment age, the eligibility age, as well as the earnings triggers for assessment. So if you are assessing manually, it's a really good place to know where to go. Once you've assessed and you've determined an employee is eligible, you then need to assign that scheme to an employee. And you can do this two ways, either through the pension assessment if you have the pension module, as I mentioned. We do have a separate webinar for that one. Or you can do it manually, which is what we'll be looking at in today's session. A quick note on the pension module. So as you can see from the screenshot here, the pension assessment will recognize that an employee is eligible. So this might be a new employee or employee who potentially has had a pay rise. And you'll see there's a little black flag next to the employee's name just to mention that the pension assessment has recognized there's been a change, and you'll see that it has auto-enrolled and added a company scheme to that employee for you. So it does it all automatically, so it both assesses and then assigns a scheme if it needs to for the pension module. But as promised, we're going to jump in and have a look at the program now and what you'll need to do, including that manual process for assigning a pension scheme. So here we are in Sage 50 Payroll. So the first thing we need to do is go ahead and set up our pension scheme. To do this, we're going to click Company in the bottom left-hand corner, and then we're going to click Pension Schemes up here in the top left. Here we have a list of our schemes. So as I mentioned, we have all our default ones, which we can amend to create our new one. I am, however, going to jump into one we made earlier, just to show you around a bit. So we're going to go ahead and click Edit. And you'll see here the first screen, which is the Details tab, gives you the option to give your pension scheme a description. So we've named it Nest Pension. A type as well, so there's a drop down there. And what I will say at this point, when it comes to setting up your pension scheme, all of the details that you need to change in here and ask or amend, you'll need to speak with your pension provider if you're ever unsure. So for example, we have it set as type other. If it is a GPP scheme, for example, you will need to speak with your pension provider. They will be able to offer you the information that you need for this one. Unfortunately, because every provider is different, we're unable to tell you which one is which, so you do need to speak to your pension provider. Sometimes providers offer different schemes as well, so it is best to speak to those guys. So the next thing in this particular screen is the qualifying scheme tick box. So this is for schemes that qualify for workplace pensions. So we do need to tick this as it is our only scheme. The next one down is whether or not it uses qualifying earnings to determine pensionable pay. So again, pension provider will be able to tell you this, and this is one of the tick boxes that you'll need to pay attention to when it comes to the calculations a little bit later on. So qualifying earnings is there to determine your pensionable pay. The next tick box I want to call attention to in the screen is the salary sacrifice scheme. So if your scheme is salary sacrifice, you will be ticking this box right here. So we'll move on to the next tab, which is the employee tab. And this is where you'll be setting the default percentage contributions, or if you click the drop down, you can set a fixed amount if that scheme determines it. We're going to stick with percentage because it is the most common out there. So we've got our employee percentage as 5%. The other thing I want to call out here is this tick box on the right hand side. So we have the deduct before tax tick box. Now that's another one that is going to become important when it comes to calculating the contributions. This just says, are the contributions meant to be taken before calculating tax or after? So again, it's either before or after tax. Of course, if it's before tax, you'll be ticking this box. The next tab is the employer tab. So here, we're just going to focus on the contribution amounts. So again, set your percentage amount. So we've got it set as the 3%. Remember, there are minimums, and that is this year 3% for employer and 8% in total. So there's no minimum for employee amount. The total contributions have to add up to 8% with a minimum of 3% for employers. Now that is the general rule. There are certain schemes where that can be changed, but again, they're very rare and they're only quite specific. So we're not going to focus too much on that. But the general rule is it's 8% for minimum contribution amount is totaled with a minimum of 3% for employers. So that means you can have 5 and 3 like we have, you can have 4 and 4, you can have all 8% for employer amount and nothing for employees if you really wanted to. That fits the criteria. So as long as the employer amount is 3% or more and the total equals 8. So the next tab is your provider details tab. So as you know, our provider is Nest. Now this is more important when it comes to the pension module as well. However, you can enter the details in here if you wish. So we've just added up provider's reference. Don't know why that word struggled so much, but provider's reference, and then of course the provider name. Once you're ready, you can click OK and then close that, and you've set up your scheme. The next step is going to be assigning that scheme to your employees. So remember, you'll need to assess your employees first. So we're going to open up employee 8 here, and we're going to go along to the pensions tab. Now you'll see that in this tab, we have primary scheme. We've got no pension scheme set currently. That is because this employee was classed as non-eligible. However, since then, this employee has also now had a pay rise, a permanent pay rise, which now brings this employee into the eligibility criteria, or the eligible bracket, which means we now need to assign a pension scheme to this employee. So we're going to click Manage Schemes. We're going to click the Add button. And the first thing to do, the scheme reference. So let's click the drop down, and you'll see there is all of our schemes that you saw in our pension settings. So we're going to click Nest Pension and click OK. So now we've got scheme reference 1, which is our Nest Pension. You'll see that our contributions have been automatically populated based on the scheme settings. Now these can be changed on an individual level in this particular section if you need to. And you'll also have a joined scheme and active membership achieved dates. So they are defaulted to what my process date is set as the 30th of July. However, again, it's good to check with your pension provider because they will then also determine what date that active membership was achieved. So we'll leave it as default for now. And the last thing to do is tick the box in the bottom right left for primary scheme. So we're going to click tick on that and click OK. So that just says this is a workplace pension scheme and it is their primary pension scheme. We can now click close, and you'll see now our primary scheme has been set. Contributions are showing as 0. That's because we haven't calculated any pay for this employee just yet. We haven't updated records, therefore no pay has been set for this particular employee, hence why the contributions are currently sitting as 0. So we're going to click save and close, and that's it. So we've now manually assigned that pension scheme to an employee. Okay, so that is assigning your pension schemes. Now remember, if you have the pension module, you don't need to go through that process because the pension assessment will do it all for you. So now we're going to move into the opting in and opting out requests. So for opting in, any employees who are non-eligible or entitled, so that you've assessed those employees and they are classed as non-eligible or entitled, these employees can still opt in to a pension scheme, so they can choose to be in that pension scheme. A couple of rules between the two. Non-eligible employees who opt in, the employer must contribute. Okay, so an employer must contribute if they are non-eligible. However, an entitled employee who decides to opt into the pension scheme, that's the employer's choice if they wish to contribute to that pension scheme. So it is up to the employer in that regard. It's only for non-eligible and of course eligible employees where an employer must contribute should they be added to a pension scheme. Opt-out requests. So employees who are classed as eligible and have been automatically enrolled can opt out of a pension scheme. So they do have the option to opt out of a pension scheme. The employee must request this through the pension provider. The pension provider then informs you that that employee has requested to be opt out, in which case then you can go ahead and process the opt-out request itself. When it comes to opting out requests as well, if they opt out within 30 days of being enrolled, automatically they are entitled to a refund. However, can opt out outside of this window. They will just be classed as left the scheme rather than opted out. They will not be entitled to a refund if it's outside of that 30-day window. So we're going to have a look now at the manual process, but first, a quick note again on the pension module. So you'll see there, as part of the pension assessment, there are 3 buttons at the top, and that allows you to process your opt-in, opt-out requests through the pension assessment directly as well. So again, that pension assessment screen the pension module, makes pensions a little bit more manageable. But as I mentioned, we do have a separate webinar all about the pension module coming up as well. We're looking at the manual process today. In which case, we are now going to jump in to our program again. So we're back at stage 50 payroll. We're going to go ahead and we're going to process an opt-out request. So we're going to use employee 8 again as an example, as this employee has now been automatically enrolled, as you saw earlier. Now, when it comes to opt-in requests, the process is exactly the same as what we just did for assigning a pension scheme. You would just add it through the employee record, entering the join dates and active membership achieved dates. So there's no difference to that process. So we're not going to cover that again. We just have. We're going to focus on the opt-out request. So again, we're going to pop over to the pensions tab. We're going to click Manage Schemes. This time, we're going to edit the scheme. Now, I'm going to change these dates quickly just to the 1st, because I'm aware we're still in June, so I am looking at the future a little bit here. Now, if this employee has chose to opt out, we will enter a left scheme date. So we'll pop the 25th in there. These are just random dates, by the way. Of course, you would have the exact dates. So we're going to enter a left scheme date. So that means this employee has left the scheme as of the 25th of July. And then we're going to click OK. I get this message because I forgot to untick the box deliberately. You can just click yes, and then it unticks it for you. As you can see, we now have a from and to date. And if I close out, you'll see there, it now says no pension scheme set. So we have now opted out. We do have as well these 2 tick boxes to inform the program that pension provider has, of course, been notified. Now, it doesn't affect too much in regards to the process. As you can see, we managed to save it fine without actually having any problems. Just pop back in to show you those tick boxes anyway. And there you go. And that is the pension scheme now opted out. So you can see we've now got no pension scheme set. So that employee has been automatically enrolled. We assign the pension scheme. We have now opted that employee out as well. Save the record and then close out. Okay, so that is setting up a pension scheme, assigning it, and manually processing opt-in and opt-out requests. It's now time for arguably the fun part, which is some calculations. So how is a pension scheme calculated, which is a really good bit of knowledge to have when it comes to troubleshooting any problems. So there's a couple of things to check before calculating, and you can find these in the pension scheme settings. First one, does the scheme use qualifying earnings? Yes or no? Is the scheme deducted before or after tax? Again, it's yes or no. So those are the 2 things that you'll need to check in the pension scheme settings. And I've just popped a couple of screenshots at the bottom there just to show you where they are. So once you've got those, we can then dive into some calculations. The other thing is the qualifying earnings. So when a pension uses qualifying earnings, the pensionable pay is calculated using the upper and lower thresholds. So you can see we've got a screenshot of the legislation settings there. In fact, before I dive any further, just to show you, because I did say I was going to, if we click company in the bottom left and then go to legislation, top left, we have an automatic enrollment tab here. And this is where you can find those lower thresholds and upper thresholds for your qualifying earnings, as well as the earnings triggers, assessment ages, and eligibility ages when it comes for assessment. So this is where you'll find all that information you need. So it's right there in your program. Okay, so a couple of examples to go through. The first example is we have a pension scheme, doesn't use qualifying earnings at all, and it's deducted before tax. So the employee contribution is 5%, employer is 3%, and the gross pay is £2,000. This employee is also monthly. So £2,000 is your pensionable earnings. It doesn't use qualifying earnings, so it's just the gross pay. So we take 5% and 3%, and we get our contributions. So this is the more simpler of the calculations. In essence, you're just working out what 5% of 2,000 is for the employee contributions and 3% for the employer contributions. So let's have a look at the next example. That was quite a simple one. The next one does use qualifying earnings and again is deducted before tax. Now I am going through all of the different scenarios here. That includes before, after tax, as well as salary sacrifice in a bit. So pension uses qualifying earnings and it's deducted before tax. Again, the employee contribution is 5% and the employer is 3%, and the gross pay is still £2,000. This time, one extra step, we need to deduct the lower earnings threshold from the gross pay. So that's 2,000 minus the 520, which is the lower earnings threshold for monthly employees. And that gives us 1,480, which is our pensionable earnings. So then we get 5% of 1,480, which gives us £74, and 3% of 1,480, which gives us £44.40. So that's how you would calculate a pension scheme using qualifying earnings and is deducted before tax. Okay, we've got an additional example for that now. So we have a scheme that uses qualifying earnings again. It's deducted before tax once more. And the contribution again, 5% and 3%, as was before. However, this time the employee's gross pay is £8,000. Now, there's an additional line here because the gross pay is higher than the upper earnings thresholds. Okay, so because the gross pay is higher than the upper earnings threshold, anything over the threshold is not classed as pensionable pay. So what we have to do in this scenario is take the upper earnings threshold, which is £4,189. We then deduct the lower earnings threshold, which gives us £3,669. Now this, in essence, is a maximum pensionable pay for any scheme that uses qualifying earnings. We then take 5% of that figure, 3% of that figure, and gives us the employee-employer contributions. So for any gross pay that uses qualifying earnings that is over the thresholds, or over the upper earnings threshold, it just means you have to take the upper earnings and deduct the lower earnings threshold. And like I said, ultimately, it's a cap almost on what contributions are. Okay, the next one, we have an after-tax calculation now. So pension uses qualifying earnings and is deducted after tax. Again, employee contribution is 5% and employer is 3%. Gross pay is £2,000 again. So it uses qualifying earnings. So we do need to deduct that £520. So that gives us 1,480 again. This time we work out the 5% of 1,480, which is £74. We saw that earlier. However, because it's deducted after tax, we need to factor in the tax relief, which is 20%. So we now need to deduct 20% from the £74, which gives us £59.20. Now that is the employee contribution, and that is what the employee will see on their pay slip. That additional 20% is added into the employee's pot by the pension provider. So they still get the tax relief. It's just done in a slightly different way. So the employee will only see the contribution of £59.20. Now this is a common one because with the employee contributions being 5%, and that being the most common percentage used out there at the moment, when a pension scheme deducts after tax, we often get questions about why does my pension contribution say 4% when it should be 5%? The reason being is it's deducted after tax. As 20% from 5% is -1, which gives you 4, hence why it looks like it's 4%. So because of the maths, it does look like it's a 4% contribution when it's not. It's actually the right one. It's just being deducted after tax. So if ever you get queries about that, and an employee may come up and say, why is my pension contribution only 4% when it should be 5%? This is normally the reason why. I have to say normally because there are other things that can go slightly awry, like it has been set as 4 by accident, but when it has been set at 5%, this is usually the reason. Okay, last but not least, salary sacrifice. So pension doesn't use qualifying earnings, but it is salary sacrifice this time. The employee contribution again, 5% and 3% for the employer, and gross pay of being £2,000. So we know that £2,000 is the pensionable earnings. We know that 5% of 2,000 is 100. Now this is the salary sacrifice amount, and we know that 3% of 2,000 is 60. So this is the employer amount. Now with salary sacrifice, the employee will see £100 salary sacrifice, but they will not see any employee contributions. This is because when it comes to salary sacrifice pension schemes, they are classed as employer contributions only. So what you're doing is, and what you'll see is, and I'll show you this in the program, the employer contribution includes both the salary sacrifice amount, £100, as well as the employer's amount, which is £60. So what you'll see is often the employer contribution totaling both of those together. Now, as an example, let me show you. So we have employee 1 here. We're just going to change our scheme quickly to be a salary sacrifice scheme and to not use qualifying earnings. So we're going to click OK. Now we're going to quickly jump into enter payments. And let's pay this person £2,000. So if I go over to the summary, you'll see there for this employee, there are 0 pension contributions. So there are no pension contributions for this employee. On payment screen, however, you'll see we have a salary sacrifice amount of £100. And if I go back to the summary screen and click the employers tab or button, you'll see there that the pension amount is £160. So just to illustrate that it is employer, it's classed as an employer only funded. So in essence, the employee is sacrificing an amount of their pay, which you then use to put into their pension pot, which is why you'll see with salary sacrifice pension schemes, the employer amount totals both the employee's contribution or the salary sacrifice amount as well as the employer's amount. So that's a little bit on salary sacrifice and calculations. So ultimately the calculation remains the same as the others. It's just how it's displayed within the program and on the payslip and in certain reports as well. Okay, it's your turn. So I'd like you to use the questions section for this, and it's completely voluntary if you want to get involved or not, and you can of course still ask your questions whilst this is happening. But we've got a scenario that I'd like you guys to calculate for me today, and it is the pension uses qualifying earnings and is deducted after tax. The employee contribution is 5%, employer is 3%, the employee is a monthly employee, and the gross pay is £1,500. Now, I've got a screenshot there of the legislation settings to hopefully help you in regards to that. But of course, if you've got your program open, you can go company and then legislation to find that out. So again, all answers will be completely anonymous. There's no judging. This is a bit of engagement, just a bit of fun. Unfortunately, there's no prizes for getting it right either. But if you just use the questions icon on the right-hand side and pop your answers in as well, and then we'll reveal the correct answer and how we got to that figure in a moment. For anyone who may have attended this session previously, as we have run this one before, I have mixed up this question a little bit to try and make it a little different for any returning ones. And again, thank you so much for those who are getting involved. I can see a lot of answers coming through. We'll give it a couple of minutes. I'll just pop on mute so there'll be no sound, and I can help the guys with some questions as well. And then I'll come back and we'll reveal the answers shortly. Okay, thank you to everyone who has popped their answers in the questions pane there. Thank you so much. So let's go ahead and make the big reveal and give you the answers right now. And I'll show you this in the program as well, actually. So this is the answer. The employer contribution is £29.40 and the employee contribution is £39.20. So those are the answers of the actual calculation there. Now let's show you how we got to that as well. Okay, so I can see a couple of you, which I'm really pleased about, missed one extra step specifically. So this was all about deducting after tax. So what I'm going to do is let me bring up my calculator for you. See my previous workings, and we'll have a look at the calculation together. So we know the employee's gross pay is £1,500 or 1,500. We know the pension uses qualifying earnings. So I need to deduct this monthly lower earnings limit, which is here. So we need to take 520 off. Now, judging from the answers, I think you all did this, which is brilliant. So that gives us a pensionable pay of £980. We now need to find out the 5%. So we'll do that, which gives us the £49. So I did see a couple of answers that said £49. So you're not wrong. You've missed a step. So that would be if the pension contribution is being deducted before tax. However, it's deducted after tax, which means we now need to deduct 20% from this figure. So I do it by doing this way, which gives us a value of £39.20. Now, when it comes to the employer's amount, you don't need to do that step. It's simply gross pay minus the lower earnings limit, and then get your 3%, which gives us £29.40. And just to show you that happening in the program as well, we have our employee here, but I do need to quickly change the pension scheme. So let's do that. We need to untick this. We need to leave that blank. And now we'll go back and enter payments. That's pay elements. We'll change their pay to £1,500. I may have forgot something here. Hang on. qualifying earnings. There you go. Troubleshooting 101. Qualifying earnings tick box wasn't ticked. There you go. So it just goes to show that knowing this and knowing how it's calculated can help you problem solve or even answer queries about employer's amount. There we go. That's better. So £39.20 with the employers being £29.40. So there it is live in the program as well. Okay, so that brings us nicely to the end of the session with 5 minutes to spare. Just to run through some further support you have available to you as well. So we do have our help center. So if you want to go to sage.co.uk/help, or you can click any of the help icons in the program at the minute, or press F1 on your keyboard, which will take you to all of the help that you need. And that does in fact relate to where you are in the program. So if you're in your pension schemes, for example, and you press F1, you're going to get given a lot of guides about pension schemes. But you can also search our knowledge base if you have a specific query about that. You can have a look through our support guides. Here is where you'll find webinars as well. So there's a webinars tab at the very top right, as you can see, and that's where you'll find our upcoming webinars. We do run them twice a week. We do have one about correcting mistakes tomorrow, and of course I mentioned we've got the pension module webinar coming up as well. There are videos in there, and of course, if you do need to speak to us, there are get in touch options via our help center as well. And last but certainly not least, Sage University. Sage University is a free resource where you can access e-learning, Sage product certification, and bite-sized learning. So you can earn badges and certificates through Sage University. And all you need to do is go to sageu.com, and I do highly recommend going here as well. There's some really good courses. You can do this in your own time and at your own pace as well. So if you want to expand your Sage Payroll learning, Sage University is definitely the place to be. So I do recommend checking that out if you ever do get a spare minute. I know payroll is always non-stop, so spare minutes are rare. If you do get one, Sage University is a great place to go have a look. Okay, so that wraps it up. We've got a couple of minutes left to the end of the session, so we'll spend that time answering any remaining questions you have. If you are leaving us at this point, it's been an absolute pleasure to see so many of you on the session today. Thank you so much as well for getting involved in that little task. I hope you enjoyed it. I hope it helped learn the calculations a bit better as well. They will be directed to a feedback survey when you come to leave the session. So it does mean quite a lot to both myself and Duncan, who's been answering questions there and also presents webinars. If you do spend a little bit of time filling that in, as it helps us improve these sessions and change up the content to make sure they're as valuable and as informative for you guys as possible. And we do read it quite religiously, so it does mean a lot to us to fill that in. Thank you so much in advance for that one. Now I'm going to jump on mute now, help the guys out with some questions, and when either we hit the 45-minute mark or quarter-to mark, or the questions have dried up, we'll jump back and say our final goodbyes. So thank you so much, and I'll see you in a minute. Okay, so we have hit the quarter-to mark. We've overrun slightly just to make sure we got every question answered, which it does look like we have managed to achieve. So again, thank you so much to everyone who stuck around to the very end. I hope you found the session very enjoyable and have had a great time, as well as learned something, of course. The only thing that's left for me to say is thank you so much once more, and hopefully we'll see you in some future webinars coming up, and you're still staying safe out there, enjoying the nice warm weather that we're having as well, of course, and hopefully we'll see you soon. Thanks for watching.